Hey everyone, Salesforce CEO Mark Benioff sounded resoundingly optimistic in the company's latest quarterly conference call. So let's take a look at the comments from the CEO and what it could mean for Salesforce stock investors. Let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, the CEO saying, look, as you can see from these numbers, we've had just an incredible quarter. Actually, we've just had an incredible year at Salesforce with strong performance across all of our key metrics: revenue, profit margin, earnings per share, cash flow, and of course, current RPO, remaining performance obligations. So right off the bat, the CEO very happy, very pleased with the year that Salesforce just accomplished. Of course, you'll recall about a year and a half ago, the company implemented a restructuring plan to cut costs. It let go of thousands of employees, and those cost-cutting efforts have paid off. I'm going to show you the improvement in profitability in the company's operating profit margin, and you'll notice up to 17.21% in the latest trailing 12-month year. That's up significantly from around 6-7% the company was hovering around for the last 5 years or so. Looking back longer term, you can see the company's operating profit margin jumping from around -7% all the way up to the most recently updated trailing 12-month period of 17.21%. So definitely substance here for the company to celebrate, definitely something there to be happy about and pleased about. Accomplishing this kind of improvement in profit margin is not an easy thing to do, and accomplishing this in today's world of significantly competitive business, it's impressive. There's cause to celebrate. There's cause to be pleased with these results. So moving on, the CEO says, we said we would restructure our business for the short and long term. We did that. We said we would place a laser focus on increasing productivity and operational excellence from across the board. We've done that. We said we were going to double down on innovation to make our core products even better. We've done that. So the CEO coming back to investors after telling investors, this is what we plan to do, this is why the restructuring plan is important, and coming back and reporting to investors and telling investors, look, we told you we were going to do this, and we did this. So give us our applause, essentially what the CEO is saying. And I give credit to management teams that can pull this off, that tell investors, look, we plan to do this, that, and that. And then coming back to investors a year later and saying, look, we did that. We told you we were going to do this, and we did it, right? So we're doing what we said. And that builds trust with investors, that builds credibility with investors, and that's something that I look for when I'm looking at companies to invest in. Management teams that can execute on their plans. Management teams that can find areas of strategic improvement and strategic enhancement, and then go out and execute on the plan, and then come back and report to investors and tell investors, look, I told you I had this idea, and if we did this, then it would lead to this, and look, it is what it was. I told you, and we did that. And that builds credibility. It's the opposite of what I see from, and I hate to continue picking on Tesla, but it's almost the opposite what I see from Tesla. The CEO continuously promising things to investors and coming back and delaying those things and coming back and falling short of the estimates, falling short of the forecasts, and on again, several times losing credibility with me in terms of trusting that you're going to do what you say you're going to do. And the opposite here, Salesforce management saying, look, we're going to do this restructuring plan and it's going to improve profitability for the company, and then coming back and reporting and saying, look, we did this and it improved profitability. There you go. Very solid. That's what I like to see. That's what I require when I'm considering investing in a company. There are hundreds and thousands of companies that you can invest in, right? You've worked hard to earn your money, right? I know I have. And so I'm selective when I consider who I entrust my hard-earned dollars too. And I look for management teams that have earned that trust. And Salesforce is one of the companies that I have rated on my list of top 25 stocks to buy for 2024. I myself don't own Salesforce stock, but it's on my list of stocks that I am considering. That's why they're on my list of top 25 stocks to buy. I have here my list. I'm highlighting for you here, and you can see Salesforce on this list right here as a top 25 stock and a top growth stock to buy for 2024. It's remained here all year long. I've had it here since the beginning of the year. And one of the reasons is that excellent improvement in profitability that it demonstrated and continues to demonstrate in the latest trailing 12-month period. So the CEO going on, highlighting the fact that they introduced their first ever dividend, another tech company just like Meta Platforms, generating so much cash flow that now it's instituting a dividend. And with the full year, fiscal year 2024, they generated $9.29 billion in revenue for the fourth quarter, and that was up 11% year over year. Now, that's another benefit there. Many companies can choose one or the other, either profit margin growth or revenue growth. It's harder to do both at the same time, to both grow revenue and grow profit margins. Strategically speaking, there's one decision management teams can make that benefits profit margin that hurts revenue, and that is increasing your price. If you increase the price you charge customers, that will improve your profit margin potentially, unless too many cancel, but generally that'll slow down your revenue growth because customers will say, well, at these higher prices, some customers will choose not to renew their contracts. Some customers won't sign up, or they'll decrease their spending with you, and that'll hurt your revenue, but it might help your profit margin because then each customer that sticks around is paying higher price and you're generating a higher profit margin. And if you manage that strategic decision well, decreasing your capacity, you can now be more profitable at slower growth. But to do both at the same time, that's more difficult, that's more impressive. That's what Salesforce has done in the last year. They've grown revenue, and they've done that while increasing their profit margin. Now, they have made several acquisitions that's helping support growth. They are a serial acquirer, and recent reports came out that they're looking to make another acquisition. And you can't keep, an article came out saying you can't keep an acquisitive company down forever. Historically, it's been incredibly acquisitive, buying 74 companies since 1999, with 13 happening in 2020. The biggest by far was the $28 billion deal to buy Slack at the end of 2020. So this potential news to purchase Informatica is not a surprise for a company that's been incredibly acquisitive. But again, when a company has not made very many acquisitions and then all of a sudden they make one acquisition, that's a lot riskier than if a company has been making acquisitions for 2 decades and they have a lot of experience making acquisitions. As an investor, you can be a little bit more comfortable that the acquisition will pay off, as opposed to a company that hasn't done this before. Regardless, investors have bid down Salesforce's stock price on news of the acquisition. Looking back longer term, data shows that companies that make an acquisition underperform rivals for the 3-year period after making an acquisition. So investors are not looking for Salesforce to be an outlier to that rule. But Salesforce has earned some credibility with their acquisition, digestion, and absorption into the business. So it's understandable that the company feels confident in making this acquisition. Regardless, the CEO feeling, and the acquisition news again follows the CEO's optimism around the company's performance, and then making this big several billion dollar potential acquisition is again goes to show the optimism, the confidence coming out from Salesforce CEO Mark Benioff. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.